This panel is organized by Crypto Economics Interest Group, founded by some Haas alumni with an idea to create a platform for alumni to share knowledge, have direct dialogue with industry leaders, and introduce job opportunities to our alumni. I have posted some information in the chat box. Today's event is for education and information only, not investment advice. Without further ado, let me kick things off. This panel has three thought leaders and practitioners of NFTs, bringing tremendous insight and expertise crossing investment, product development, blockchain, and marketplace. Layne, Nitin, Eric, welcome to the panel. Such an honor and pleasure to be joined by three of you. Please briefly introduce yourself. How about starting with Layne?
Thanks so much for the kind introduction, Coco, and thanks so much for hosting us today. Hi, everyone. I'm Layne. I'm the co-founding product lead of Flow, the blockchain built by Dapper Labs. I was one of the co-founding members of the CryptoKitties team. And Dapper Labs is a company based out of Vancouver, BC, which is where I am right now, where I'm a staff product manager, and we build communities on blockchain to connect people to the entertainment they love in ways that wasn't possible before. There's sort of three different layers of the company. One is the studio, and that gave us the flagship NBA Top Shot product earlier this year, which some of you may know, Dapper Wallet, which is seamless crypto onboarding, and then Flow the blockchain, which is the thing that I spend most of my time on to serve those ecosystems at scale. Thanks so much for having me.
Nitin?
Yeah, hi. Thanks for the invitation, Coco. My name is Nitin Gaur. I currently serve as Director of Financial Services and Digital Assets. I also founded Blockchain Labs in early 2012 and 2013 IBM. Realized that we were going in the wrong direction, and so then I founded Digital Asset Labs to bring the notion of digital assets in that ecosystem. And my focus is more towards understanding NFT economic models, as well as introducing them to the typical enterprise in terms of figuring out as to how it could enter the mainstream financial services. So glad to be here.
And Eric?
Hi, everyone. My name is Eric. I've been working in the crypto space for a few years now, mainly focused on these crypto native organizations called DAOs, decentralized autonomous organizations. I was probably one of the first people working full-time in that space, and been working in that space ever since. Currently, I'm working at Rarible protocol. It's an NFT protocol, so basically tooling for an NFT infrastructure for teams and applications, and I'm leading the ecosystem there.
Thank you so much. I want to set the stage with a couple of very basic questions. Let's keep brief for now. We'll revisit them later on. So the question is, how would you describe to people not knowing much about non-fungible tokens or NFT, what they are and how they are similar and different from cryptocurrencies?
Do we just jump in, or?
Yeah, you go for it, Eric, since you want to jump in right in, so go for it.
I guess like the difference that I see is digital currencies is very much like money. You know, it can be subdivided to any amount that you want. If you want a fraction of a penny, you can have that. Whereas non-fungible tokens, high level, are an asset that typically it can't be subdivided. So, you know, a good example in the real world is like a car. You can't have a fraction of a car or a house. But these assets in the crypto space, NFTs, are digital versions of that. So an example might be a piece of art, for example. So that would be my high level difference between the two.
Yeah. And I would actually take a little offshoot of that to what Eric described. Eric, you're absolutely right. Is if you look at, and let's focus on fungibility before we go to non-fungibility. And fungibility is all about an ability. And when we came up with notion of things that are exchangeable. So for example, the US dollar has a value, and all of the US dollar had the same value. They all look alike, and they are exchangeable, and they're fungible. And most of the fungible currencies sort of have three characteristics. They have store of value, which means by itself, it has some value that can be exchanged. It's a medium of exchange, which means that you can have use the currencies as a vehicle to be able to exchange various things of value. And it's a unit of account, which gives us an ability to be able to equate, as opposed to what, when we move from barter system, to be able to equate things of value into a fungible unit, which allows us to be able to have this, a single stream of value, attachment to these things of value. Non-fungibility sort of makes things a little bit more interesting because they are unique. They have a permanent information. They have some of the elements of the fact that they are unique in its characteristics. And as Eric described, in an extension of that would imply things like my identity, my driver's license. These are unique. And while everybody has a driver's license, some of the attributes of driver's license are very pertinent to me. Art, not everybody appreciates all types of arts. And so you have the value of art is different in different, tastes and different people who value them differently. So there's a whole element of uniqueness. And there's still value. There's a value of my driver's license to me. And while someone can steal my identity and misuse it, it's still my identity. Right. And so there's a whole element of the value transfer that shifts with the non-fungibility of it. There's a lot more we'll discuss, but I'll stop at that and love to get Layne's opinion as well.
Yeah, thank you, Eric and Nitin. That was great. Maybe I'll just try and add sort of a concrete component for the audience here. So maybe think about fungible tokens as something where that's what would normally live in your wallet or in your bank account, and it's where you care about the amount of the thing that you have. Non-fungible tokens are things that would live in your house. They're items that are unique to you, much as Nitin was pointing out. They're items that are yours, and you care which one that you have. And so fungible tokens, it's much more important the balance of the things you have. It doesn't matter which specific one, it's the total amount. And non-fungible tokens, it matters very much which one you have. It's something that is personal to you, it belongs to you, and you can think of examples of non-fungible tokens being basically anything in a room around you right now. Those would be constituted as non-fungible tokens.
That's very helpful. So, for example, telephone numbers are unique. Each phone number is unique, or each driver license is unique. So the uniqueness is non-fungible. The core of non-fungible is the uniqueness. Am I right?
Right, and it's supposed to also encapsulate some attributes. Like phone number by itself is of no value, but it's your phone number, and your information is tied to the phone number, your identity and your billing addresses. So when you encapsulate those elements, suddenly now your phone numbers can be quote unquote tokenized, because the token has some element of value, whether it's your personal information or whether it's the ability for me to contact you. And I think that's why what ENS, or Ethereum naming services, which is similar to what we have done with domain name services, is how we locate a website, has become part of an NFT, that it's unique and only you can have it. And it's, every sort of name service that's there, it's unique. So I think it's an ability for it to encapsulate an attribute that points to something more valuable, is how I would classify it, Coco.
Okay, that's very helpful. Thank you. So NFTs just coming waves, that's my observation. And CryptoKitties are among the earliest use case of NFTs, launched around 2017. CryptoKitties introduced a lot of people into NFTs. Now, what has drawn them to CryptoKitties? Layne, I know you have the best answer. Do you want to start?
I don't know about the best answer, but I can tell you what we observed. So the CryptoKitties popularity, I think, came from sort of three main components. The first is that people love cats. We're seeing that with stoner cats now. We saw that in the early days of the internet. People are just crazy about cats. And at the time, there was absolutely a need for people to be able to understand what was happening in crypto, and putting a cat face on it helped a lot. But it also went so much further than that. CryptoKitties were a digital representation of these cats that we love, but they also had this function that could be completed with them, the breeding algorithm. And there was that component of surprise. So for those who aren't familiar with the game, CryptoKitties involves buying CryptoKitties and then breeding them together. That's one of them, or that's the icon for it. And then you breed them together. You use the breeding algorithm that's issued on Ethereum, and that generates an entirely new cat. And you might get a cat with different traits based on the parents. you might get an entirely new cat with unique art that's called a fancy cat. And so there was this element of surprise that got people really into it. Just there was a game component. There was something that they could really see manifest other than just a return on their asset. But I think the third and maybe the most important component of what made them so exciting at the time was the desire for people to participate and understand what was going on in crypto, especially in the press. ICOs were huge in 2017. Everybody was talking about crypto. Nobody really knew what to make of it. And what really prompted me to get in this space actually was solving exactly this problem. It was that there was a lot of talk and people still were kind of like, but what is it? Like, why am I here? And CryptoKitties was a succinct answer to the question of like, oh, so you don't get cryptocurrency, don't worry, like you can just try cats instead. And of course it was the same thing, but the technology was a lot more approachable. So I think that the combined sort of approachability of cats and people loving cats, as well as the press just being really excited to have something that they could tangibly explain to their readers what cryptocurrency was and what was going on with this whole ICO thing on Ethereum. CryptoKitties notably wasn't an ICO, but that was sort of what was making headlines at the time.
Did you ever envision the congestion that it caused? Like when you were coming up with these ideas, did you ever envision the chaos that it would ensue in a few weeks later?
No, not at all. And so maybe another sort of brief bit of context for those who weren't familiar with the project at the time. CryptoKitties quite famously broke Ethereum. The level of interest in the project ground the entire network to a complete halt because gas fees got so high that it was just completely, the network both couldn't process the transactions and the price was so high, it was completely inconceivable for most people to run the transactions they wanted to. That was never the intention. We had no idea that the ceiling of performance on Ethereum was as low as it was. We could have never guessed that it would have broken with the number of users we had, because it was a lot of interest, but by mainstream consumer application standards, CryptoKitties was actually quite small in terms of as far as games go, like thousands of users, but not millions, not what Top Shot's doing right now. And so we had absolutely no sense that Ethereum would break at the level that it did. And afterwards, we were getting hate mail from people being like, you've broken the network. Like, I need to do legitimate financial transactions. How dare you put your cats on it? And we're like, we're sorry. There's nothing we can do. Like, it's a decentralized platform. People want to use it. And so, yeah, no, absolutely. We did not know what chaos would ensue. And it certainly wasn't our intention to break Ethereum.
Mm-hmm. And so that was the genesis of the creation of Flow project.
It was. I feel like I'm really hogging the panel, but I can't explain that if you want me to do it now.
Yeah. We'll leave that too, because I have one question just designated to the protocol or the infrastructure. That was something very interesting. We should address that in a later question. So that's great. Fast forward to 2021, a year we see the second wave with net-breaking growth and development of NFTs in terms of products, trading volumes, and value. So can you name one or two most important drivers behind explosive growth in 2021? I just try to understand and wrap my head around it.
I can speak from my end. Really, the triggers that I see was one, a lot of attention towards really high-profile names and artists getting higher valuations on their digital art, which we had never seen. The NFT space for a while was, you could buy a lot of art on Super Rare and things of people producing really beautiful art, but relatively cheap. And then we saw kind of a race to grab a lot of this art, and we saw the Beeple sale, which broke records, and more and more people were just like, oh my god, like digital art is going to be worth something, and there was kind of a rush towards that. And then the second big trend that is still playing out are these like collections that people are dropping, profile picture, 10,000 NFT type collections that are sometimes algorithmically generated. And so what happens is you have a team, they have cats or they have some other creature, they create 10,000 with a little bit of variation, and people buy them. And that trend to me is very speculative. It reminds me a lot of the ICO boom in 2017. So there's a huge speculative nature to it. And in addition to that, it's, what's starting to form now is some of these communities that have formed around a certain profile picture or a 10K drop are starting to actually do productive things as a community and figuring out, oh, maybe we want to do another drop, and so it's a very interesting dynamic where it started as a speculative boom and now it's turning into communities forming around certain groups of NFTs, which is fascinating.
Yeah. And if I may add something to that, right? I think the way some of us view this space, having spent a lot of time both in the enterprise as well as in the permissionless world, is the fact that we think that it's a confluence, a perfect confluence of art, culture, technology coming together and creating new business models. So if you look at the early days of Bitcoin, when we started this journey, our entire conversation was around disintermediation. And it was about payments. It was about truly moving value globally. And then came up DeFi after some time. And decentralized financing did some wonders in terms of truly creating value out of thin air and disrupting the traditional financial models to what it is today, which is about $2.3 trillion worth of economic value of DeFi. But there was always this underlying theme of disintermediation. And so when you look at artists and folks who are creating art and music, there are all kinds of insane numbers. The music industry itself, it's 40 billion, and about 12% of that really ends up with the real artists, people who are actually involved in. And so while blockchain was viewed as a disintermediation platform, we believe that finance is boring to begin with. For many people. But at the same time, I think finance is complicated for common people to understand. But NFTs gave an avenue for people to own a part of history, gave avenue for them to be able to express their interest in sports, collectible art, music, which we all have some hobby. And so while we all may not be financiers and understand finance to its core, we all have a inclination towards owning that piece of thing that we love, whatever that is. And I think it's a confluence of those things coming together, which in 2021, I think as of 3 weeks back, the NFT transaction volume has surpassed the the DeFi transaction volume, which is telling, I think. Maybe not in economic value, but in overall transaction value, it has certainly surpassed the DeFi space. So certainly interesting trend, I think.
And from our perspective up here, up here being Canada, NBA Top Shot really took off right after Christmas of 2021, and so NFTs were again making headlines. Like, what are these digital basketball cards that people are talking about? Why, like, LeBron James is on the blockchain? What do you mean? Like, tell me more. And people were really excited about bidding on those. And so there was, I think, absolutely a combination of all of these factors that really got it back into the zeitgeist and got people talking about it. And as soon as two people in your friend group say something to you in the span of a week, which is what happened with the term NFT, I think that pushes things over the precipice. And so there was enough joint activity in lots of different areas, understanding finance, understanding owning things, what are the top shots, a little bit of COVID boredom, all, perfect combination of factors for people to really take the world by storm with NFTs.
So if you want to name one favorite NFT project, what would it be?
That's a good one. What's the name of the one? Loot, right? That Loot project, which recently emerged, and it kind of flipped the concept of NFTs on its head. Previously, people were thinking of NFTs, like especially art and images, as like, that's what you get, right? And we imagined that, maybe in the future you would have a sword, and that sword, you can move it between games, and it would be your asset that you could use in different games. And that was kind of the concept. And Loot, what they did is they kind of flipped the narrative where instead of producing an image of a sword, they just created a literally text on a card with different words. And what that did is it really opened up the imagination, because what started happening is that, say you had sword written on a piece of paper on an NFT, then you could bring it to various games, and those games could just create the sword because you have the sword word, right? So it was a really interesting model that a whole ecosystem kind of started growing around these cards that just had words on them, because it opened up the imagination and the possibilities of being a lot more than a physical object. It was just something that represents something, and you can build a lot off of that. So I thought that was fascinating.
Yeah, loot is super cool. That's like the beginning of the term we often use is composability, the idea that there are sort of these standards that are reusable across all these ecosystems, and those base lists of assets that people will reuse is really fascinating. And yeah, it does indeed flip NFTs on its head.
And I would say that for me, I'm a platform guy and I'm not a gamer. I don't fully understand, though my son does. And I'll tell you this, the ability for me to be able to tokenize an emotional moment was priceless. And that's, to me, is true definition of what NFT would be. My first concert ticket, Imagine Dragons with my son, the very first concert, that's priceless. And I was able to sort of, again, thanks to Raribles, was able to convert that into an NFT, and I sort of own that now. And yes, it did pay a certain amount of gas fee, but that, again, to me is something which hopefully stays forever, which I have to otherwise rely upon Apple Wallet to maintain that image of that ticket. But at a more serious level, and while these are all emotional moments that you capture, again, these are unique moments which signify, again, the whole element of cultural shift that we are seeing. I'll say this, Coco, that this is not just a phenomenon that's loose in the open space. I think from the enterprise world, where I spend majority of my time into, are looking into treating them as non-bankable assets, the ability for people to collateralize this. And I have some amazing statistics to be able to quote in terms of the gravity of the area where the NFTs and non-fungible tokens are moving into. While they're not exactly fungible, but they do represent a lion's share of the value ecosystem that's evolving.
Yeah, I would really love to echo that point, because adding functionality and utility to what NFTs do, that's what will really help us cross the chasm of what's possible here and get people engaging. And yeah, so like fractionalization, collateralization, everything related to getting NFTs, expanding their utility, and then adding sort of interesting components to them, like in your case, the concert ticket that represented a real moment in time for you, and tying that with the release of the next record from the artist, and really combining experiences together so that the creators of content and NFTs are bridging your experience across different moments of your life. And that's lots of these projects haven't been released yet, so maybe I can say a future facing favorite NFT project. It'll be when culture and entertainment, we recently announced the Liga and La Liga, and that really, I think, is going to change what it means to convert NFTs from online to offline, and what will the experience look like when when people are really at the game and there's a digital representation of it, and just helping people understand different facets of the moments where they're experiencing the game in real time is going to be really cool. But I don't want to chintz on your answer. So favorite project that exists right now, I actually just recently found this NFT, is a bonsai tree art project, and I just think they're really cool. They're really cool little bonsai trees.
Bonsai, okay. That's great. Thank you so much for this. So we noticed that people, including retail and institutional investors, are paying hundreds of thousands of dollars, sometimes even millions of dollars on NFT. So what do these investors or buyers see in this product? Is it just pure speculative? I know you all touched a little bit on this. So can you elaborate a little on, why do people want to pay so much money for this product?
Well, I think one answer, I mean, certain categories, certain groups of NFTs have almost reached like a symbol status. There's this concept called Veblen goods, which is essentially items whose price curve is sort of inverted. So there's a fixed supply of them, and the more demand, the higher the price goes up. Usually the more demand, the lower the price. So rare items and art items are Veblen goods. And so some NFTs have reached that category where, there's only a fixed supply of them and people want them. And so price can only go up because there's no supply essentially. So, like CryptoPunks is a good example of that, where, right now they're selling for a lot of money, and it's just because there's a fixed amount of them. Other examples I think are very speculative. Sometimes people think that and buying these first NFT drops is almost like a seed investment in these groups, because what some of these groups are starting to morph into are like communities that are generating profit. So there's that aspect, but it's kind of, it does baffle me a little bit, some of the prices that I'm seeing. Some of them, instead of being speculative, they're almost like a club. And, if like there's a recent project, Nouns DAO, and they're selling one NFT every single day, a generated NFT. And these are selling for, upwards of $1 million every day. And it's really like a club, and if you own one of these, then you own a Nouns DAO, and you have private access to their chat. And so there's different variations, but yeah, I'd say there's different flavors of speculation, restricted access, and V-Bling type goods, but increase in price.
Yeah, and I would add to that, for example, Layne, I think you probably have immense satisfaction to be the first sort of CryptoKitties, the hallmark of the beginning of this movement. Even though in the enterprise space, we've been talking about NFT for like 4 or 5 years now, which is looking into identity and looking into healthcare records, which is more towards the straitjacket enterprise world. And it's $1 trillion problem, globally, both in terms of how do we monetize data, how do we monetize record, and I think there's one way to capture that. But to your point, Eric, I think it's all of the above. There's a little bit of status symbol, which we've talked about this in quite a bit in metaverse and the early days of whether it's Bitcoin whales or early days Ethereum sort of whales who have acquired a lot of these tokens, would like to make history. It's a part of that whole culture to say, I've gotten first of this piece of work, I've gotten first of that. And what we have seen in the art space too, whether it's a digital art or looking into the real art and destroying the real art and creating NFT, is sort of trying to make a point in terms of having this whole notion of immutability go to the whole new level. So I think there's a whole level of history creation that we look back 30 years from now and say, hey, this was all the first sort of digital art, exactly how we look at vintage art today. So there's a little bit of, I think, some of those other elements, but there's a whole lot of speculation too, I think, and that's sort of, taking the lion's share of a lot of announcements and a lot of things that we see front, and the scarcity in that space, in my opinion, can simply be artificial. So I'll stop at that. I'd love to get Layne's opinion as well.
Yeah, I really agree on the scarcity status, and the point about scarcity status, and then the ability to reconcile data globally is incredibly valuable, especially when it's a unique identifier for an individual. The access to the fact that these tokens are giving you access to communities is also certainly part of it. People always sort of bundle themselves off into little corners of the world to understand value and what matters to them. But I think it is worth noting that having highly volatile prices and prices that are maybe over what you would expect, that it's indicative of just an early market trying to price an asset. But it like, make no mistake, it is an entirely new asset class. Like, these digital assets are things that hold value, and they can be transacted seamlessly globally. That's amazing. That's the fact that that is possible is absolutely incredible. And everything in our lives largely is going to be digital. And so the fact that these things that represent that digital value to us are expensive is not really surprising. But the fact that all of them are, not all of them, but a large majority of them are memes right now, it's us testing the technologies, people understanding what's cool, what's not cool. But some of them are absolutely incredible. And much like traditional works of art, where people are paid a significant amount of money for their skills, crypto art also is showcasing an incredibly small group of people express the skill of creating digital art that can work with other experiences, that's maybe 3D in its nature, that can be shared across ecosystems. And that is really cool. And for the people who get that, they're really excited about it. And they often would maybe even argue that some of those assets are underpriced.
So that's it's a perfect segue to the next question. So when it comes to marketplaces to buy and sell NFT products, do you have to go to specific marketplace, and are they different from those marketplaces during the internet time?
Eric's got to take this one. Got to go to Rarible.
Yeah, so I work with the Rarible team. So Rarible.com is one marketplace. It's an aggregator. OpenSea is another aggregator. Actually, we're soon going to be launching Rarible on the Flow blockchain. So, we're partnering with Layne and Flow. Now, yeah, I mean, there's a number of different marketplaces. There's a number of different verticals depending on, what you're interested in. Super Rare is a great place for more of the high-end art, for example. But I would expect that as time goes on, there's going to be more and more marketplaces for NFTs. Rarible protocol specifically is a set of tools to build marketplaces and storefronts and, applications to buy and sell NFTs. So, I'm expecting all sorts of verticals to pop up: gaming, real estate, any kind of asset you can imagine is going to want their own storefront for their own asset class, because aggregators only go so far. So yeah, I'd say that would be the place I would start. Rarible.com. Check it out. You can see what it's about. You can go to OpenSea, Super Rare. Those would be the top ones. I'll add some links in the chat.
That's great. So how about protecting creators' ownership? So is this still a challenge? As in on internet markets, because that is something that has been challenging. So when it comes to NFT, and since it's on blockchain, is it easier or is it still challenging?
Happy to jump in on that one. It is still challenging, but I think especially when we see content created on blockchain first, it becomes significantly easier. There's sort of a social consensus that forms around the idea that this is where the art was first reproduced. This is the royalty contract associated with it that the community should be enforcing if they want to listen to this music or whatever it is. I'm using music as the example because there's a project called TuneGo that's specifically dedicated to rights management. They're launching on Flow fairly soon, and so we're starting to see projects very meaningfully solve this problem of music rights, royalties, distribution, and rights in general for creators is something that we're trying to build out with the metadata standard, which is sort of a standard that would go on top of NFTs to explain this is who created this work of art, and this is what they should be paid in perpetuity for that contribution to the ecosystem. So it is we are making progress there because the basic bones of property rights and payments exist in blockchains, but there's definitely a problem still to be solved around social consensus and at what point do the scales tip and people use the rights management of blockchain over that of for example a management firm or whoever is normally licensing and distributing those artist works.
So I would, piggyback on that. That's what Lynn mentioned. One of the problems that I have seen, and I've experimented, a lot with this space, is the fact that most of the content, the images, the pictures, I don't think they're fully utilizing the Web 3.0 infrastructure. The whole notion of decentralizing storage, compute, interconnect, and leveraging the underlying protocols, whether it's IPFS for distributed and long life of these content. I still see a lot of content, lying in some, Google or Amazon sort of servers, and God knows when that's decommissioned and you end up losing the digital content per se. But I think there has to be some lineage, and this is where I think the true sense of metaverse, where we are looking into the Web 3.0 technology ecosystem evolving, whether it's Filecoin and storage and many of the storage technologies, looking into many of the technologies that are providing connectivity protocols, like Helium, for example, is trying to sort of disrupt telco spaces and so on and so forth. I think there has to be a connectivity between the content creators using blockchain as a transaction platform to be able to exchange the value, assert identity, and use these sort of underlying protocols. And I would imagine that the valuation of some of these things would be all-encompassing and would distill down into the collective transaction volumes that you would see in each of these layers. That's the holy grail, I think. And I'll say something else where, recently we looked into the, what happens when the content goes missing. And so I think if you look at one notable thing that Twitter did this is NFT verification, which in my opinion is much bigger than having a Lightning network for payments or for tipping, is exactly that, is the ability for me to be able to say, hey, if I'm cutting and pasting this JPEG, because it's a digital content which can be replicated, unlike what you would do in blockchain world, I think that has to be ironed out, not to mention interoperability, which is, let's say, between Flow and Ethereum, for example, would be an interesting space to exchange and move value. I'll stop at that and see if Eric has any thoughts, or Layne.
Yeah. On my end, I think one of the beautiful things about the NFT space and the crypto space is that it does allow traceability of assets, and you can actually verify that a certain asset was created by a certain artist or a certain band or musician or things like that. And in that process, it also allows the opportunity for artists and creators to monetize their own creations more effectively. So yes, there's a lot of tooling missing. I think there's all sorts of places where I think there's going to be a lot of improvements in the coming space. But I think that's part of the reason why people get so excited is that it really allows for the creation and monetization of your intellectual property, which we've never really had before. I remember hearing something about the music space and how the musicians earn, how much the musicians actually earn over their entire work. And I'm personally really excited in disrupting that model and really empowering creators and people who are generating ideas and innovation. I think that's a very promising and exciting potential.
Yeah, that's a good point that I want to expand a little bit. So when it comes to the payout of royalties of NFT art, including music, is there any difference in the business model from traditional arts? So when payout of royalties, can those artists get payout in the secondary transaction? And
yeah, they can absolutely still
receive. Sorry.
Sorry, Coco, didn't mean to cut you off. I lagged a little. Sorry, go ahead.
No, I just said that just whether there is whether there's any change in the royalty payout model compared with the traditional art.
So royalties are still, they would be paid out the same in the sense that they would go to a list of people predefined who should accrue some fee for that song or work of art being shared in perpetuity. But what's really, and that would just happen enforced on a blockchain, and so therefore globally rather than in the legal jurisdiction of wherever the sort of issuing agency was normally formed. I think the really cool part about royalties though, and what's unique here is that, then of course I just lost my thought. The coolest part, what a cliffhanger to drop it on.
Is the secondary markets.
Yeah, thank you. You're getting royalties on secondary markets and the distribution. The fact that artists have their barriers to entry for them to issue their own art and be able to enforce royalties on it where they maybe otherwise wouldn't be able to. They would just pass it into the world, hope people listen to it, and then build up a following or a brand of sorts. In this case, they can just distribute it however they like and get royalties for any marginal listener of that music, and that's pretty cool. And to Nitin's point, that you can capture those secondary market sales as well, which is huge. So I think the important thing to think about here is that artists now have an additional, there's new places where their income streams. They're getting broader distribution than they would have before. They're getting peer-to-peer and different marketplace transactions, and they're also getting royalties enforced globally rather than just in sort of a single jurisdiction.
And there's something else which I think you'll find interesting, Layne and Eric, since you all live in the NFT world. I was recently talking to a few banks in terms of very large banks in terms of looking into, because banks are getting into custody. They're getting into in traditional finances, looking into what a digital asset custody would mean, which fuels the ETFs and so on and so forth. And the question that I was asked for is that most banks have risk models for, let's say, real estate. And real estate also has NFT in those markets. And the question was, can we take the risk model we have and use those tokens as collateral for things like lending and borrowing and so on and so forth? And I found that interesting because that thought process now has seeped into the traditional financial world. And potentially, I think, and this is the numbers that I was talking about earlier, Coco, is that if you look at the traditional equity space, and you certainly know this because you're in finance, is close to globally around 471 trillion. And we did analysis once in terms of if you were to take all the things that we value that financial industry doesn't really have tools or doesn't have a risk model to measure these things, it's in the magnitude of $2.8 quadrillion. So if I'm an artist and if I have this history and a clear way to monetize on my royalties, whether it's in primary markets, secondary markets, can I not collateralize that future stream of income and borrow against it? And I think that's in its own right an NFT model that actually opens up a whole slew of opportunities in the space, which I think just looking at this, from that perspective becomes fairly simple, transparent, that there's nothing that's hidden, because you could look into many of these blockchain infrastructures and be able to extract the valuation models and so on and so forth. I'll stop at that.
Yeah, I would echo that. I think to your question of, does it enable the same models as the traditional space? It's the answer is yes, and a lot more that the crypto space and the blockchain space enables. That we're just starting to see these sorts of experiments, and there's going to be a whole slew more ownership models that we can't even physically do in the physical space. Like Nitin was talking about, collateralizing against future revenue streams and things like that. It's going to get quite wacky.
That's fascinating. Yeah. So the next subject is something we already touched on earlier. NFTs are run on blockchain. So Ethereum is the first one to support NFTs. Can it continue to support NFTs' fast growth? Because Layne mentioned earlier that CryptoKitties almost crashed Ethereum. Do you see any potential for other layer one blockchain to take over Ethereum?
Yeah, great question. I don't think it'll ever be about one blockchain taking over another blockchain. That's probably too simplistic a view to take of it. The bottom line is that we need infrastructure around the world that's optimized to solve different problems. And Ethereum is right now probably one of the best platforms for DeFi, just based on how much liquidity is there. And those transactions, especially when it's always about the context that you're using it in. So Ethereum doesn't scale meaningfully for many NFT projects that are high volume and lower value transactions because the transaction fees are so high. But when you're doing really large DeFi transactions, a $30 fee, all of a sudden, maybe that's only 0.03% of a fee rather than 3%. And so it really does come down to the use case and much more than just strictly a question of scale or not scale. So that's sort of point one. The most likely outcome is that there's multiple blockchains that all work well together with the technologies called bridges. And so the idea is basically that you have these like checkpoints that blockchains have where they're clients of each other and they can reconcile state, even though they're operating on different consensus mechanisms or sort of different security models that are still tend to be fundamentally compatible. Otherwise, chains don't integrate with each other. There's a whole bunch of purists of us out there that'll make sure that the security standards match if we're bridging things. But to directly answer your question of like, will Ethereum scale for mainstream applications? Probably not, because no single platform could. That's not a jab at Ethereum. It's the fact that like this is going to be the underpinning of all value, identity, asset transfer in the world. That's what blockchains will ultimately serve. And so for any one platform to serve that would be absolutely insane. I'm not going to tell you that Flow will serve all of it either, but different blockchains are optimized for different things. Solana, one where they like really optimize the execution environment, it'll probably do very well for fungible token transfers and DeFi. Flow is designed for something very different. We designed it to scale to the kinds of applications that we saw build out of CryptoKitties. So the combination of non-fungible tokens, as well as all of the different offshoot applications from that. So we've mentioned a couple times here, collateralization, fractionalization, the idea that there are different smart contracts that take in one NFT, and then this question came up earlier, so I guess I'll explain it briefly. So fractionalization or tokenization is this idea that you take one thing and then you split it up into a bunch of parts. And so if there was something that started as a unique whole, you would divide it into maybe 10 different pieces. If that unique whole, to go to Nitin's real estate example, if that's a $10 million home or a $1 million home, you split it up into 10 pieces that people can afford. And so in that process of splitting it into parts, it maybe is more affordable for different people to get exposure to those income streams. To bring that back to the point of composability, what that means for the platform is that it has to manage more complexity than it would have otherwise if it was a simple value transfer. And so we optimize Flow for those complex operations where there's lots of different contracts and there's lots of complex things happening. But if you're optimizing for something else where it was just simple value transfer back and forth between different individuals, then maybe you would choose a different platform. And so the punchline of this is there won't be one to rule them all. It'll be a group effort from all of the different chains serving different niches and then reconciling state with each other, most likely.
Yeah, I agree. And go ahead, Eric.
Sorry, it might be a little bit of lag. I would agree to that. And yeah, I mean, if you think of like the kinds of NFTs that are out there, some things are going to be a lot more valuable than other things. You know, if you're buying tickets to a game, for example, as NFTs, you don't really need an extremely secure network. Whereas if you're, you know, putting your house on the blockchain or, you know, I don't know, some other high value asset, then security is a lot more important. And so the different blockchains have different trade-offs, and yeah, I think that we're going to see we're definitely in a multi-blockchain world. Yeah,
and I would add two things to that, right? One is there has to be a rich ecosystem around it. So if you look at the NFT financialization protocols, right, the ability for you to be able to take a fraction of a house, which is a asset that I can be able to buy and sell, maybe not the first concert ticket, which has an emotional value, but nonetheless, the ecosystem that surrounds it should have a wallet, should have a storage mechanism, should have a mechanism, an ability for us to be able to move from one liquid market to a different liquid market, or find markets that has a higher valuation mechanism, lower transaction cost. So there's a technical componentry to it. So I think Solana, Cardano, many of a dozen of these Ethereum competitors who are popping up, they're providing a level of specialization, is reducing cost. But the ecosystem is still rich around Ethereum, which is the walleting structure and the custody models and financialization of some of these protocols. But as you begin to see, to Lynn's point, the ecosystem evolve on most attractive protocols. So let's say Flow becomes the de facto, a natural, gravity that attracts all the NFT development projects and walleting structures and ability for you to be able to move, which is what Aave Gotchi, if you realize, like what Aave is trying to do in taking NFT and using NFT as a collateralization models. I think that ecosystem is equally important than purely the transaction costs. And I'll give you one more advantage. I mean, a example where my son, he's 16, he's a gamer, and I don't understand anything about gaming. And I usually go back to him and say, hey, why is this sword of value? And why would you move this in metaverse? And I asked him, I said, you play all these games, why don't you go and play Axie Infinity and make some money from it, right? And his immediate response was, Dad, Ether is too expensive at the moment. And for you to be able to make that leap of why aren't you playing Axie Infinity to saying, I'm waiting for Ether to come down so I can afford the initialization to the game. I think it's telling to exactly Lynn, your point that, if I'm simply spending a small amount so the cost of NFT itself is a lot lower than the cost of transaction fee, which doesn't make sense. So I'll stop at that.
Yeah, and I just want to echo the ecosystem piece, because I think it's really important. I do some things on another blockchain. So I mainly operate in Ethereum. That's where I spend most of my time. But for some transactions and some activities, I use a chain called XDAI. And yeah, I mean, when I want to do some things like swap my currency to something else, I basically have to go back to Ethereum because, there's missing some of the ecosystem in the XDAI network. And so building that ecosystem and having tooling so you can convert currencies and fractionalize and the liquidity, It's super important, and you know, definitely a challenge for blockchains to build that out.
So besides what we said, we just covered, is there any other hurdles that need to be jumped over in order to have NFT adopted by even more users and investors? For example, payment, on-ramp.
Yeah, I would say digital penetration, and this is something which, guys, I have worked on, gosh, like more than I can count central bank digital currency projects, and in this blockchain space, we're looking at economic inclusion. And the biggest challenge, both in India, Colombia, Uganda, all the places that we have worked in, is the digital penetration, is availability of network, access to networks, access to phones that have capability of secure elements, which provide some level of security and not relying on various third parties. So that's one element and that's, we are closing the gap. And again, I think we have all heard about the famous story of Axie Infinity in Philippines during COVID, and that's all over the map. But I also think that there's a structure around movement of money, because the fiat and fiat equivalents are still an avenue for us, for many people to get into the space. So not everybody's a miner, not everybody understands the technical constructs of blockchain and how the incentive economic systems work. They're still relying upon an exchange mechanism to take your money or equivalent asset and be able to convert them into a digital asset, and that digital asset allows you to participate in these ecosystems. So that's a third, angle around as to how this system work. And the third thing that's emerging, which may be a developed world problem at the moment, is regulatory framework around markets themselves, and the classification of NFTs. We'll not touch upon that now. You could spend a whole half a day on that topic, but I'll pause at that, and I'd love to get Eric and Layne's opinion on this.
Yeah, well, Eric, looks like you're not quite unmuting, so I can jump in. The regulation point's a good one. So the two big barriers that I think we are going to have to get over on are both usability related. So one of them is to come back to that fees point of Nitin's son not being able to play Axie Infinity because transaction fees and the price of Ether is too high. That is really significant. Like, games stop and experiences stop, and people don't build businesses because of how high transaction fees are. And that's really prohibitive, especially when so much growth comes from people hacking in their basement or on the weekend. Like, when this is something people are trying to do for fun off the side of their desks to just sort of learn a little bit about it, the fact that it feels like you're making a financial decision is overwhelming. Like, that's too high a barrier. People shouldn't get into crypto feeling like they're immediately making a financial decision. They should get into crypto feeling like they're trying something new. And so bringing transaction fees down is going to be really important for the ecosystem overall. It was an early tenant of Flow. They're much more affordable. I'll let Eric attest to that if he feels so compelled. But the second really big area is that regulation has been quite, I think we all saw, China's now banned cryptocurrency. And so regulation is still really not sure what to think about NFTs. And I don't know that anyone would try and take on the task of speeding up regulators. They'll take the time that they need to take, but it's our job as people who are working in the space and building out these experiences to just ensure that people have as much information to make good decisions about protecting themselves as they can, because of course, regulation is supposed to be there to protect consumers. If they're not doing it, it's our job to make sure people have the information to protect their own assets and ensure that they're not getting involved in a scam or anything like that. And so at least on Flow, the way that we plan to address that is readable transactions, which is just the idea that rather than you pressing a button and all of your money disappearing, there'd be a little button that says, hey, if you press this, your money's going to disappear, and just giving people that level of clarity and transparency about what's happening rather than hiding it behind a very complex transaction, which is sort of what people are dealing with right now. So the usability has a long way to go.
Yeah, on my end, definitely fiat on ramp, off ramp, getting more people on board, and tooling in general. I think we're not yet at the point where a Web2 developer can, in a weekend, build an NFT application. I think we're really close. We're building a lot of toolings on our protocol so that Web2 developers can quickly learn and quickly get onboarded and not have to know how to code Solidity or smart contract language, and they can just basically build. So I think once that we have that unlock, I think we're going to see a lot of developers coming into the space. and experimenting, and making it accessible to them is going to really, similar to in the internet world, it's just going to open the floodgates, because then innovation can happen relatively seamlessly. Mm-hmm. So I think those are a few different areas.
Mm-hmm. That's great. Okay, so we are approaching the end of this panel. But I want to really ask one question on behalf of some alumni, or a lot of alumni. What kind of talents are most in demand in NFT space? So welcome any recommendations and suggestions to our alumni who are interested in getting involved or working for an NFT company.
Oh, you're muted, Nitin.
Thank you. So I'll go first. I think two areas. Right? One is, I think that, to Eric's point, is of course the Layne developers. You need a bunch of developers to be able to build cool projects. But I think there are two skills that stand out for me, which I've had the hardest part in acquiring these skill sets, because they simply don't exist, is having a good blockchain architect. You still have to rely on layer 1, layer 2, and understand the mechanics. And so in most cases, technologists such as myself have suddenly become economists with blockchain, because we try to understand the economic models. And now with regulation coming in, we become legal professionals too. So you'll find that you have to traverse between business, technology, economics. So blockchain architects, to me, the business architecture that is hinging upon layer 1, layer 2 is really important skill set to have. Is what does that architecture imply, both in terms of security, but also in terms of the economic model that your business is supporting. Second thing, which has become more and more important, especially for startup, is around token modeling. So I've spent a lot of time with a bunch of startups that I support, I help with, I work with, is figuring out the right token structure, which sort of helps us also skirt the regulation issue in terms of, should we design a system that is focusing more on utilitarian value, or is it purely an issuance model, which is for fundraising, which can eventually become a problem later on, if not now, 2 years from now. Those two, in my opinion, are something which is good value to have, both from business school perspective, but also from technology, domains. I'll stop at that.
From my perspective, I think anyone can get involved in the blockchain space. I really think that the NFT space, the blockchain space, there's so much growth happening. I know personally, at least in our group, we're looking for literally like anyone who has the drive and interest in marketing, biz dev, tokenomics, governance. We're basically growing on all fronts. Definitely, if you're interested, happy to talk to people. I mean, personally, I've been, reaching out to my friends, from engineering school, being like, hey, like, have you jumped on the crypto train yet? Like, there's like a ton of opportunities. You shouldn't wait any longer. And, a few people have listened and they're really happy. And, but most people don't listen.
They'll listen to you when there's better tooling, right, Eric?
Yeah,
always
exactly.
what it takes. We're just going to cross the tooling precipice. So to build on both Eric and Nitin's points, those folks are definitely needed. And I would add that it really is anyone who's willing to consider that a different business model is what's going to drive the next generation of applications, because and it goes to Nitin's point about architecture, and also to Eric's point about anybody who's willing to just try and figure it out. Because what's amazing about these systems and remarkable is they really are defined by the idea that network effects compound, and that when you have digital infrastructure, much the way we have physical infrastructure in a city, when a blockchain gives you sort of like a city-like environment to build businesses that has a base layer of, there's street cleaning, and there's lights, and there's a postal service, and all of these things that we take for granted when we live in a city. What blockchains are really giving you is sort of that layer of base infrastructure to build an economy on top of. And so internalizing the idea that you're contributing to infrastructure at a base level, especially at this stage, I think all of us would tell you that we've worked on some version of open source software that we don't monetize, and that's fine, because we're contributing to the overall infrastructure and the ability for other people to build on our stuff. And so internalizing the idea that you're building on digital infrastructure, and that the nature of those products have multiple income streams that are defined by how many people engage with them and how many people like them, rather than your ability to corner resources. Like, the business model of blockchains is no longer corner people's data, corner your IP, make money by keeping a bunch of rights in a closed little circle and extract monopoly profits from it. Instead, the business model is much more build community, build ecosystems, get recurring revenue channels and royalties based on people interacting and exchanging with these assets on an ongoing basis. And that's really incredible. That's absolutely amazing. Anyone who's been in business school recently knows about the powers of network effects, especially when they compound, and that's what's happening digitally now. But it does require a really thoughtful level of sort of engaging, because it's completely different than what you would have learned. It's different than certainly what I even learned in business school, and that wasn't too long ago. So you do have to, anyone with the skill set to really think differently about business models and develop products in a space where the revenue models and revenue streams are quite different than what you probably normally deal with, would really encourage you to apply. So, and that doesn't need to be a finance background or anything like that. It just needs to be someone who's willing to consider what happens when a model's been flipped on its head and what comes out of that. So systems engineers often kind of like the way blockchains work. And I would just really encourage anyone with a creative bent or background who would sort of lend themselves well to this early ecosystem of creators. You'll probably find a home here.
It's great. I could continue the dialogue forever. Unfortunately, I have to wrap it up.